There's the CEO of Tech Mahindra. But to discuss the earnings for Tech Mahindra and the large cap IT space so far, we are now being joined by Sandip Agarwal, the fund manager at Sowilo Investment Managers, to take some questions. Sandip, good morning. Thanks a lot for joining in. Let's start off with Tech Mahindra because that is the stock of the morning. The CEO making some ambitious remarks there, 15% EBIT margins by FY27. But then at the end of the day, it is aspirational, right? Because 7.5%, almost needing to double their margins in the next 3 years. Do you see that as a feasible estimate that the CEO has highlighted? And is the stock reaction to those comments justified today?
Hi, and good morning. Thanks for having me on the show. So let me put it this way that, first we will see the numbers. The numbers were slightly better in my view than estimate on all fronts. And also what Mohit is saying, I think it makes a lot of sense. I can give you some history. Last 2 decades, if you see data for any IT company, it is almost impossible for any IT company to operate at 6, 7, 8% margin for a longer period of time. I think that Mohit has taken a very long timeline conservatively of saying by FY27 it will be 15%. In my view, it will not be FY27. Maybe we will see exit of FY25 or beginning of FY26 that it 15% margin coming. Maybe 14, if not 15. So I think the big jump in the margin will happen very quickly in next 2-3 quarters because the kind of client this company service, they are all big clients, fortune companies. They give good pricing, good margins. All this low margin is primarily to do with the cost structure and the inefficiency within the system, which I am very confident that Mohit is more than capable to clean up all those inefficiencies and get rid of whatever is hitting the margin right now. So I am more confident that if not 15, the 14% margin number will come very quickly. So that is what my take is. So I think whatever he has said is very much doable, and I think they will achieve it.
Okay. So before we move on to the next stock, Sandip, hi, welcome to the show. Your sense on how investors should look at Tech Mahindra, does it deserve a buy even at this price?
See, Sonia, I think we are, at the almost, end of the unproven disruption cycle. Let me put it this way. So in technology, if you see last 30-year data, whenever a new technology comes, then there is a lot of pain in the beginning because your workforce is not trained in the new technology. So it takes everyone time to train their workforce, majority of workforce. And I think we are at the end of that cycle. Most of the companies, maybe midcaps may take 2 more quarters and the large cap will take 1 quarter more. And when that happens, then your margins start improving substantially and your growth comes in. So I don't know if Tech Mahindra will go down 2, 3, 4% from here and then it will make a bottom. But I think this price is not at all bad for a long-term investor. You will make good amount of money because the 7.5% EBIT margin, when it goes to 15%, we are talking about 100% jump in EPS only because of margin improvement, because the sensitivity of margin is 1% is equal to almost 12.5, 13% EPS growth. So that is over and above the revenue growth delta which you will get. So I don't see any reason for no one to buy at this level.
Okay. The other stock I wanted to ask you about was Mphasis, because, we had a chat with the management and they said something very interesting. They said shorter duration deals are now picking up and that's because the early signs of discretionary spends are happening. So they are not too pessimistic or not as pessimistic as they were a couple of quarters ago. Is that a positive read-through for you and for Mphasis investors? Does it make sense to buy afresh?
So, I won't comment on Mphasis specifically, but let me put it this way that, if you see TCS numbers and the type of deals they have got, and even for the other companies, there may be disappointment in terms of current quarter numbers, or there may be disappointment in one forward quarter guidance also. I'm not denying that, but the breakup of the deals which we are seeing, not only in Mphasis, but in most of the tech companies, they are very clear signs that, discretionary spends have started opening up. I think quarter 1 will be the one where, we will get more clear signals that, deal wins are increasing and the sector is rebounding, because there is no way that, there could be such a big lag effect in last 20 years. If you see the big 5, big 7 companies in the US, whenever they do well, we see the benefit coming after 3 to 5 quarters. So we are almost at the 4th or 5th quarter once their numbers have started changing around. So I think maybe quarter 1 or at max quarter 2 is the one where you will see good growth coming in for the sector. So it will be very sharp because this is B2B business. So like what happened in February 21 and March 21, you will see a repeat of that in my view in July, August sometime.
Sandeep, stay on. We have a couple of more questions to ask you, but the other big mover in the tech space today, that was my question, right? Not only just Zensar, but the entire mid-cap IT space. It has been a comfortable outperformer over the last 12, 18 months if you compare it to the large cap space, and their valuations have also significantly run up, say for the likes of Persistent and for LTTS and stocks of those kinds. Do you see that mid-cap IT has further room to run, considering the run-up that it has already seen? And not specifically for Zensar, if you have a comment on Zensar, sure, but on a mid-cap IT basket overall.
So, I will bring your attention to Tech Mahindra again and compare it with Zensar. So, if you, as Rima rightly said, the stock has given 128% return in 1 year, you just go 4 or 5 quarters back and see what was Zensar's margin. It was like 4 or 5%, and that time also some of the clients who used to ask what to do with the stock, I used to say that this is an unsustainable margin for the IT industry and IT companies. And because their end clients are very good clients, they're fortune companies, they also don't want these companies to, make 4 or 5% margin, because they know if they make 4 or 5% margin, when they want to, expand their execution, they will not be able to provide manpower. So I think same thing will happen in Tech Mahindra. Again, this you can do a comparison with Zensar Tech last 6 quarter margin, how they have moved. So that should give you some comfort on the tech end side. Now coming back to your question on the mid cap. So again, the right way to look at is today what you are calling mid cap would be, large cap 10 years. If you go back in 10 years back and you see the today's large cap, which you call large cap Infosys, they were of same size what today's mid caps are. So in that time, they were the large cap despite this size. So what I'm trying to say here is that, these companies, whoever crosses $1 billion, they are basically eligible for any kind of deal participation. So it is wrong to, think that they will not do well. In my view, the bigger advantage for these companies that they are just crossed 1 billion. So they have whole arena opened up to participate in any kind of deals, and with slight margin improvement and slight traction in the cycle, they can do wonders. And also good part is that most of these stocks, if you see, they have corrected from the peak by 20, 30, 40%, except 1 or 2. So, that is good correction. And in my view, one more quarter and these stocks, if they are available 7-10% below from here, it will be a very good level to buy, because see, their growth rates will be 4-5% higher than the large cap. So their multiple will also be at least 5-6 multiple higher than the large cap. That is the way we look at it. So I think wherever there is 19-20% growth, and if the multiples are also 20 to 25 times, you should actually look at those as a good opportunity. I think the cycle is turning. As I said, July, August is the time when you will see actual deal wins coming in.
Okay, got it. The other conversation we had was with Cyient, right? A relatively smaller company, but they spoke about how the telecom sector, or the communication sector rather, has not recovered for them. And there's a bit of caution that still prevails over there. Any thoughts on how to approach this one?
So, communication always is the last one to recover. If you see any cycle in the past, communication is the one which will recover almost at the end. So I concur with their views, and I think maybe communication, you will see some turnaround at the end of December or beginning of January next year. And till that time, high tech and the technology services has to compensate for the lack of growth from other segments. And in case of Cyient, the advantage they have is they also have a strong presence in the thin lines of ER&D, so the off-highway and others which are doing good in Europe and US, and expected to further recover after June. I think they will compensate for that lag. So I would say that mid-cap ITs, particularly all the names we discussed, they are maybe 1 quarter away from when you can see the turnaround, but the stocks might have made their bottom. That is the way I look at it.
All right, Sandip, we leave it at that. Thank you so much for taking time out and sharing your views on a whole host of IT counters there. Sandip Agarwal of Sowilo Investment Managers taking us through his views on IT. But as we slip into a short break, we have an announcement to share with you all. Our upcoming live personal finance webinar, the CNBC-TV18 Accelerate, will feature none other than top market expert Nilesh Shah, the MD of Kotak Mahindra AMC, who will answer all your questions on managing your finances, and also conducting a special masterclass on what not to do with your finances and the mistakes to avoid. CNBC-TV18 Accelerate, the personal finance handbook, will also feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on the 11th of May at 9 a.m. We have limited seats. Scan the QR code on your screens to register.